Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 28th, 2025, and we're diving into the latest earnings report from Alliance Resource Partners, one of the largest coal producers in the eastern United States. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Alliance Resource Partners has just released their second quarter 2025 financial results, and there's a lot to unpack, from revenue figures to strategic updates and future guidance.
Revenue and profitability overview. Let's start with the top line. Alliance Resource Partners reported a total revenue of $547.5 million for the second quarter of 2025, which is a 7.7% decrease compared to the same quarter last year. John, what are the key factors behind this decline?
The decrease in revenue is primarily due to reduced coal sales prices, which fell by 11.3%, and lower transportation revenues. However, it's worth noting that coal sales volumes actually increased by 6.8% to 8.4 million tons, which helped offset some of the revenue decline. Net income for the quarter was $59.4 million, translating to an EPS of 0.46 cents.
And how does the adjusted EBITDA figure fit into this picture?
Adjusted EBITDA came in at $161.9 million, down from $181.4 million in the previous year. This decline is largely attributed to the lower revenues and a $25 million non-cash impairment loss on an investment. Despite these challenges, the company managed to increase the fair value of its digital assets by $16.6 million, which provided some cushion.
EPS forecast and analyst expectations. John, analysts were forecasting an EPS of 61 cents for this quarter, but the actual EPS came in at 46 cents. What does this tell us about the company's performance relative to expectations?
This indicates that Alliance Resource Partners missed the EPS forecast by a significant margin. The shortfall can be attributed to the lower coal sales prices and the impairment loss, which weighed heavily on the bottom line. The forecast was based on a survey of 2 analysts, so the miss is quite notable given the small sample size.
How might this impact investor sentiment?
Missing EPS forecasts can often lead to negative investor sentiment, as it raises concerns about the company's ability to meet financial targets. However, the company's strategic initiatives and future guidance might help mitigate some of these concerns.
Operational efficiencies and future outlook. Despite the challenges, Alliance Resource Partners has made some strategic moves. Can you elaborate on their operational efficiencies and future outlook?
Absolutely. The company increased its coal sales volume to 8.4 million tons, marking a 6.8% year-over-year increase. They've also secured 17.4 million tons in new sales commitments for delivery between 2025 and 2029, which is a strong indicator of future revenue streams. Additionally, they've declared a quarterly cash distribution of $0.60 per unit.
And what about their updated guidance for 2025?
The company has adjusted its coal sales guidance to reflect current operational realities, with an increase in the Illinois Basin and a decrease in Appalachia. They also expect higher productivity rates and lower costs at Tunnel Ridge, which should improve their margins in the second half of the year.
CEO commentary and strategic initiatives. Let's discuss the CEO's commentary. Joseph W. Kraft III provided some insights into the company's strategic direction. What stood out to you?
CEO Joseph W. Kraft III highlighted the improved conditions at Tunnel Ridge, which is expected to lead to higher productivity and lower costs. He also emphasized the strong market fundamentals, driven by higher natural gas prices and increased power demand. The regulatory environment is also favorable, with recent legislative actions supporting coal's role in energy security.
How do these factors influence the company's long-term strategy?
These factors position Alliance Resource Partners well for future growth. The focus on operational efficiencies, combined with a supportive regulatory environment, should enable the company to capitalize on market opportunities and maintain its competitive edge.
Key takeaways. In summary, Alliance Resource Partners faced some challenges this quarter, with a decline in revenue and a miss on EPS forecasts. However, their strategic initiatives and strong market fundamentals provide a positive outlook. John, any final thoughts on their investment prospects?
While the EPS miss is concerning, the company's operational improvements and new sales commitments are promising. Investors should keep an eye on how these factors play out in the coming quarters.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Alliance Resource Partners' performance in the comments below.